Hello friends, today I am going to talk about cash flow challenges for MSME and I'll be giving 6 core concepts with the help of which you will be able to overcome your cash flow challenges. So in case if you are ready, then we can start with the flow, and I would like to start my presentation with the beautiful quote from my author, from my favorite author Sidra Jafri, and she always says the best way to make someone happy and wealthy is to be happy and wealthy first. You cannot give what you don't have in your life, right? So with that, let us set the context for another 20 minutes of time. Take notes because these concepts are really powerful, and if you understand those concepts and if you implement it, most importantly if you implement it, you will definitely and certainly get the results out of it. And in case if you have any questions or any suggestions, then please post it in the message box or in the comment box, and I will personally get back to you on those comments and on those messages. So let's begin. So cash flow challenges. So the first challenge is poor cash flow challenges. Let us identify first of all what are the pain areas of the MSMEs. So most of the MSMEs are coming from a diverse background. They have their technical expertise with regards to the business management, but most of the time they are the one who are doing everything for their business. They are managing their sale, they are managing their operation, they are managing their finances, and they are managing their people as well, that is human resources as well. And they don't have much of the understanding about the cash flow management. So whenever if you are lacking any skills in any of these areas, so the first and foremost important is we need to gain the knowledge on those areas. So this is first problem, that is poor cash flow management or lack of awareness on the cash flow management. The next one is bank loans are hard to obtain. Most of the people, when they start their business, the first and foremost problem, they are ready to scale their business or they are ready to take up the next step, but the problem comes with the finance, the problem comes with the money. They don't have the available resources, ready resources, to take up their business to the next level. And most of the time people face challenges in terms of lack of security to give against the loan, or lack of knowledge about the various products which are available to the MSME, and this is something wherein the MSME or the MSME business owner struggles a lot in getting the loans from the banks. The next one is inadequate cash flow. This you must have already experienced in your business, that most of the time people struggle to make the payment of their monthly dues to their staff, to their vendors, to their taxes. I rarely remember, only few of the people or only few of the percentage of the class out of the total MSME are paying taxes right on time by way of paying advance taxes, right? Rest all people, they are all doing year end activities, and they don't know how to manage this cash flow effectively or very well. So this is something a problem which every one of us face very frequently. The next one is credit risk. So most of the time, in order to increase the business or increase the volume of the business, what we do is we offer or we extend the credit period to our customer, and sometime that customer becomes a devil, and that devil keep on postponing the payment, keep on delaying the payment, and that is something every business is having a credit risk, right? So these are certain cash flow challenges. In case if you know any other challenges, or in case if you are facing any other challenges in your business, then please post it in this comment box or in the message box, and I will definitely try to revert on each of those messages. The next one is, now let us understand the concept, and next one is ever increasing fixed overheads. So our profit margins are very limited, but the overheads, the salary is increasing every year on year, the rates of the material, the rates cost of the services is increasing year after year, but our margin is not growing, and that is the concern, my dear friend, and that's the reason we are into the trap of that cash flow challenge, and we always into that cash flow challenge all the time. all the years. So now let us understand the core concept. These are certain pain areas, right? So the first core concept is cash conversion cycle. So cash conversion cycle means what? So fundamentally, whatever resources if you are having, that resources, how much time you are taking, to convert those resources into inventory, into accounts payable, into sales, and then later on collecting the money from the customer and finally getting the cash out of it. So just to illustrate the best example, say for example, if your average inventory period is, say for example, 45 days, and if your average accounts payable period is around 30 days, and if your average collection period is of 60 days, so the what is the equation, or what is the cash conversion cycle in this phase is 60 plus 45 is equal to 105, and 105 minus 30, so can I say 75 is the exact answer, right? So 75 is your cash conversion cycle. So lesser will be the effective one. If you have the cash conversion cycle of 30 days, fantastic. If you have the cash conversion cycle of 10 days or 20 days or 25 days, anything which is on a lower side as compared to your industry average, that is always good. In terms of service business, those people, they will not have the inventory for them. So for them, they will incur the overheads every month on month. They need to incur the overheads to render the service, and so basically the time lag between accounts payable is probably 30 days, because most of the time we pay the salary on the first of the following month, salary or any rental or any expense for that matter, and the credit period from the customer, say for example, is 60 days. So 60 minus 30, your cash conversion cycle is 30 days. So lesser will be the better is the thumb rule. So next one is, so these are some of the concept, that is days of inventory outstanding. This is not applicable absolutely for service businesses. This is only applicable for manufacturing and trading concerns. Then days of sales or service outstanding, and then next one is, last one is days of payable outstanding, right? So this way you will be able to calculate cash conversion cycle. So the first and foremost important aspect. The next one is having a cash budget in place, right? So once you have the clarity that on which particular month the cash flow will arise, or cash flow will be in place, or when my receipts. So basically cash budget is nothing but, in simple word, it is a receipt and payment. Every businessman is doing this stuff in some or the other way, but there is no structured way with which they are doing it, and that's the reason they are lacking the clarity in managing their cash or in managing their cash flow, right? So the first and foremost is, we need to forecast all our receipts, especially if you are it is good if you can make it for a year, and then if you keep on reviewing it, and at the same time you need to manage your forecast your payments as well. You need to use your mind. You need to imagine the anticipate what are the cash inflows and what are the cash outflows on various occasions or on various months, and by way of this, by doing this, you will exactly come to know in which month you are short of cash, or in which month you are short of having a cash flow issue, right? And with the help of this cash budget, you will be able to overcome the real problem of cash flow. The next one is, in extension of the cash budget, you may have the long-term cash forecasting. In many of the large MNCs or multinational companies, they have their budgets, they have their cash flow budgets as well for the 1 year, 3 years, 5 years, 10 years time, including for the revenue expenditure and for the capital expenditure. They precisely estimate, they precisely forecast their whole cash flow, and then they work on their operations, they work on their businesses, right? And that is the way forward to manage the cash flow position effectively. So you first and foremost thing is, we need to sit down and forecast our cash flow position for 1 year, 3 years and 5 years, right? In case if you are lacking some skills or core skill on those area, you may take the help of your consultant or your financial advisor, to prepare your long term cash flow forecasting. And then the key is to revisit and review frequently, because this is something not a rocket science or the magic. We need to again and again revise and revisit those estimates, because it's all estimates, it's all forecasting, right? So that's the reason once you review it frequently, you will get the exact clarity on those. And one of my mentor always says, when you have the clarity, you will get the conviction, and when you have the conviction, then you can accelerate the speed. And that's the magic, my dear friend. The next concept is collection and payment. So this is something a pain area for most of the small and medium entrepreneurs, and that is having a right control on your collections and receivable. We need to have, because in many large organizations they always maintain a separate department for collection and receivables, for addressing the queries of the customer, because most of the time your accounts team sends a wrong invoice or sends an invoice with the wrong amount, and then it get kept on hold at the customer place, right? And your payment is stuck because of one small incident. So for that matter, you need to have the right control on your collections and receivable, and for that matter, you need to set the right policies in place. You need to have one or the other person to manage your collection and receivable very, very well. The next one is vendor payment policy and control. Most of the time, many people are doing the vendor payment in a firefighting mode. Whenever the vendor calls for the payment, they keep on saying, yes, I will do it, yes, I will do it, yes, I will do it, and some or the other way, out of frustration, they do the payment. But don't do that way. You should have the right policy in place, and you should have the right payment processing in place, and by way of that, you will avoid duplicate payments, or you will get the right credit period from your vendor, and you will be able to manage your cash conversion cycle very well. Then last one is debts. Not the last one, debts. There are various kinds of debts in debt instrument which are available to the MSME, and the first and foremost, which is more beneficial to the MSME, is before going into the debt instrument, I would like to give one insights on the how you can utilize debt in your favor. So say for example, so I am again repeating this point, how you can utilize debt in your favor very effectively, and very effectively, and just for your advantage. So say for example, if you are paying 10% rate of interest or 11% rate of interest on say for example, for the simplicity, I'll take 10% rate of interest on the working capital limit or on any debt instrument. Suppose if your income is falling under a 30% tax bracket, it means if your net income is above 10 lakhs, it means what? You are falling under a 30% tax bracket. So the first and foremost important aspect is you can claim the amount of expense which you are paying to the bank as an expense, and that expense is allowable for deduction under Income Tax Act. And by way of that, your actual effective cost of debt is not the 10%, but effectively it is 7%. How 7%? Because of the interest cost, you are saving 30% tax out of it. So 10% minus 7%, 3%, 30%, you will get 7%. And that 7% is the cost of your debt. And my dear friend, in case if you have the avenues and opportunities, to deploy your surplus fund in the other assets, then you will be the master of your game, or you will be the master of your this thing. Because what you are doing is, whatever surplus you are having, that you are investing in other instrument, and you are gaining 12% or 14% out of it. And here you are just paying 10% to the bank, and effectively you are paying lesser amount of taxes. It means you are effectively paying 7% as the interest, So the 14% minus 7% is the leverage again you are making out of it. So that is one more way of managing your cash flow position. And so I'll just throw some light on the debt instrument. So first one is working capital limit. This you can get it against stock or debtors. In case if you are only a service business, then you can get the working capital limit against your debtors or customer outstanding. So say for example, if you have a customer outstanding of around 1 crore, then of course you will get the around 70% of the 70% of your debtor outstanding as your working capital limit. Of course, there are certain other parameters and other criterias as well. I will not go in detail. In case if you want the more clarity on the debt instrument, I'll create a separate video on those topic. But for now, I am restricting myself to the limited explanation. So working capital limit. So this working capital limit for a trading or manufacturing concern, you can get it against the inventory or against the your customer outstanding. If you are against inventory, you will get against paid stock, you will get 75%, and against debtors you will get 70%, right? And the rate varies from 9.75% on around 9% to 13%. Then this is a short term term loan. So suppose, say for example, if you don't want the working capital limit and your business is such that you need a term loan, say for example, if you would like to buy some fixed asset or if you want to do some expansion in terms of your capacity, then you can avail the term loan, and again you can avail the tax leverage out of this term loan. Then next one is long term loan for short term or vice versa. So many people do this jugglery, and what they do is they use long term loan for short term purpose and short term loan for long term purpose. So say for example, out of working capital limit you are making the payment for buying a factory or for buying an office, which is a very wrong and nonsense decision, right? So we should never do this mistake of utilizing our short term fund for long term purposes or long term fund for short term purposes, right? And then the last one is which is the key. Most of the time many business owners, they have the goal, they set the goal for their sales. Many business development consultant, they encourage all the MSMEs to set the target for sales. Few of the MSMEs set the target for profit. So say for example, many people set the target. Say for example, right now I am doing 1 crore of my turnover and I want to take this operation to 10 crore, but there is no clarity on the profit. How much profit you would like to make out of that 10 crore, and that is the important aspect. And then the last one is, no one or rarely someone will have the goal of having the cash profit, because there is no point in having the business. Say for example, I have the profit of 1 crore, but the entire profit of 1 crore is stuck in the debtor and stock. Then there is no meaning of that profit if you cannot enjoy or you cannot utilize that profit for the further expansion, right? So the cash is the king. And my dear friend, the elevated goal is having a cash profit goal. And then the last concept is investment of surplus. As I already explained, in case if you manage your cash position well, then you can create multiple source of income by way of investing those funds into some other instruments. Say for example, equity, debt, bond, fixed deposit, and you can earn passive source of income, right? So say for example, if I am doing good in my business and if I am having, or if I am sitting on a cash surplus of 5 crore, what I'll do? I will not do a trip every month, international trip every month. What I'll do is, the wiser way is to invest those money in the other instruments, so that your passive streams of income will build and you will be able to experience the cash flow proposition. So I think that's it from my end. Thank you so much.